Hello and welcome from Trend Signal for our review of the data and events the week beginning the 8th of December. The week has started with equities on the defensive, concerns over growth. Many of the headlines on Monday morning not particularly bullish. Chinese imports fall as weak investment saps demand. Japan's economy worse than initially reported. That's second reading of their third quarter GDP, and comments about the ECB's monetary measures not sufficient without quantitative easing, which is a constantly debated as to whether the ECB will be doing it or not. It certainly looks like they will be doing it at some stage. So we've had some interesting moves last week. The non-farm payroll or employment data in the United States came out at a whopping 321,000 new jobs in November, an increase of 0.4% in wages, with the unemployment rate though remaining unchanged at 5.8%. For the statisticians, it's the biggest jobs gain since January 2012, and it's a lot higher than the average over the last year, the average being around 225,000 jobs. So a very positive number, and a knee-jerk reaction in the US dollar, higher in equities, and a pullback in bonds, reflecting the possibility or idea that obviously rates will have to rise, as we know they will at some stage in the latter part of 2015. More data like that, I'm sure the Federal Reserve will be revising that particular guidance. Other than that, we've had some fairly bearish news overnight from Japan, some very poor reading on the GDP. The recession that struck Japan after a tax increase in April was deeper than first reported, according to the Financial Times. The problem with what's going on in Japan, it's engaged in a massive quantitative easing program that should have stimulated the economy and pushed up inflation, but that's definitely not the case. In fact, the poor data over the past month, including this previously released preliminary GDP data, has caused the yen fall to accelerate, and the yen has now fallen since the 30th of October just under or just over 12 yen to the dollar. So that's an 11% fall against the dollar since October the 30th, which is extraordinary. And as you'd expect, asset prices have done fairly well. The Nikkei rallying quite sharply as the yen has depreciated, helping a lot of those exporting companies. Of course, there is a big criticism of quantitative easing that it doesn't actually address the real problems. Just by devaluing the currency is not an answer to the needs. It is in the short to medium term, but some significant fiscal measures are needed, which certainly are lacking or appear to be lacking for now. Data. Well, actually, just quickly look at the markets. Last week, we had some other significant moves, not just in the dollar. Gold, that rallied quite sharply, although that happened this time last week. That was last Monday when gold spiked sharply, but spent the rest of the week falling, retracing some of those gains, I should say. Brent crude, well, that just continues to fall. It's an extraordinary move, down another $1.40 or nearly 2%. Multi-year lows there, and obviously the impact been felt in those producing nations, and Russia, for example, looking at dollar ruble as a sign of how turbulent things are there. A big oil producing exporting country depends on the exporting crude. The cost to the Russian economy is it's implied to be somewhere around $140 billion a year, so you can understand why the dollar ruble rate has rallied the way it has done as the ruble collapses. Data this week is fairly sparse following the deluge of data last week. We've already kicked off with some data, the Chinese trade balance, but really the first bit of data that we're interested in here in the UK is the manufacturing production at 9:30 on Tuesday morning. We also have inflation data out of China They'll be felt. We'll see that on Wednesday morning when we get in. We got two interest rate announcements this week. The first being from the New Zealand Central Bank, not expecting anything there. As indeed with most central banks, if anything, the pressure is to lower rates. Now, certainly is in Australia, that's for sure. We also have a Swiss National Bank meeting culminating on Thursday. They're not expecting any change there either. Obviously, rates are at the all-time low, so there's nothing much that we expect from that. In fact, the only real data this week of note is the retail sales data due out on Thursday lunchtime from the United States. Retail sales looking to post a similar reading as we did last month, plus 0.3%. In fact, this is implying a plus 0.1%, but it's between 1 and plus 0.3%. Unemployment claims, well, we know how strong the recent data is. I think that'll be watched for signs that strength has continued or will continue. And then we finish the week on Friday with the PPI data, the producer price index. That's the value of goods, actually price of goods going into production. And then we have an interesting leading indicator, the preliminary University of Michigan consumer sentiment. Consumers in the US very much buoyed up by certainly the way equity prices are performing. Not just that, but the price of crude, which is really putting a lot more money into the consumer's pocket as the price of gasoline plummets. And it's a lot more reflected in the price of gasoline as opposed to here in the UK, where only 35% of the cost of our diesel or petrol is actually the raw product, the rest of it being tax. That's it for the week. Thank you very much for listening, and bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.